All right, what up, Tycoon? Super excited for today's video. We're going to give an update on Wish. We're going to look at the intrinsic value. We're going to look at the chart, and we're also going to go over the best strategy, I think, if you are looking to be an investor in Wish. Okay, so make sure you like, comment, and subscribe to the video and to the channel. Also want to shout out, the person who commented for this one. I do viewer requests every single week. So if you want to see your stock in the next video, make sure to comment below. All right. So we're on alphaspread.com right now. Like this website, it's pretty good for giving you just some quick info. All right. So we're looking at the intrinsic value. Okay. And under the base case scenario is $2.17. Okay. Meaning that currently Contextlogic is undervalued by about 42% per share. Okay. So why are we looking at the intrinsic value? Well, the reason being is that there's two types of investing, right? There's value investing being one of them. And, Warren Buffett is famous for his value investing. Okay. So, if you want to really have a successful strategy with a track record, okay, the term value investor is something you should look up, right? And so intrinsic value is what people are looking for if they are value investors. They're looking for stocks that are undervalued. Okay. Now, that's the base case. Okay. There's a worst case scenario where it is undervalued by about 9%. Okay. And a best case scenario where it's undervalued by about 63%. Okay. So, again, the base case scenario is that Wish is currently undervalued by 42%. But there's some important things we need to look at. Okay. So let's go ahead and look at those real quick. If we look here, it's got a 41 on the profitability score. That's not very good. Okay. It's got negative free cash flow, negative operating income, negative net income, negative average 3-year ROE. Okay. The solvency score is a 56. So not the best as well. All right. Those are some things that you need to, kind of look into, right? Especially if you're looking to be a value investor in Wish, these are some things that you would look further into. Okay. Now, if we look at the Wall Street price targets, the Wall Street price targets are actually really interesting. Okay. We have, and this is for the 1-year price target for Wish. Okay. So right here it has a 19% upside. Okay. This is the lowest forecast. If we look at the average forecast, it's actually got a 148% upside. All right. And the highest forecast has it at a 495% upside. So, the last time that, I went over a stock and we looked at some numbers like these, you see a lot of movement in the stocks. Okay. There has been a really, really great rally that's been going on in the market here recently. But, Jerome Powell just spoke recently last Friday. Okay. And it kind of brought the market down. Okay. Suggesting that he's going to keep tightening, not really going to be dovish, that there's not going to be a dovish pivot that a lot of investors were hoping for and trying to anticipate. All right. So enough of that. We're going to go into the chart now. Okay. And what we are looking at right now is going to be the 3-year weekly chart. Okay. So that's what all of this info right here is what's known as our volume profile. Okay. This shows you volume by price. All right. Most people are familiar with volume by time. Volume by price is going to be a critical edge in the market. Okay. Trading is like going to battle. Investing is like a battleground. You can't go to war without the proper weapons. Okay. Without the proper, preparation. Okay. You have to be prepared. So this is going to help give us an edge. Okay. This is something that we can bring into our battleground of the stock market. And what we're seeing, what I'm highlighting is high volume nodes. Okay. You see these high volume nodes, and then you see these low volume areas. All right. The way stocks work in the stock market is we're going to see price action move from high volume node to high volume node. All right. And look at where we are currently at. We are at the highest volume node. All right. Currently, it's at $2. Okay. We're even actually below there. Now, the reason I'm pointing this out is because, again, we're going to move from high volume node to high volume node. So Wish may still continue falling, but there's such high volume at the level at the price of 2. Okay. There's so many transactions going on that to me, it shows that, when Wish does start to rise again and look to go bullish, where it likes that $2 number, right? Retail traders aren't going to be able to come in and create the highest volume node. Okay. Meaning institutions are the one doing this. So what does that tell you? It tells you that either institutions are doing the most amount of buying they've ever done on Wish, or they're doing the most amount of selling they've ever done at Wish at the price of $2, right? Well, look at where it's been. It hasn't really ever really traded at $2 over the past 3 years. So to me, it seems like this is a lot of institutional money accumulating below $2. Okay. So $2 and below could be, a good price if you're looking to hold Wish on the long term. All right. Meaning, definitely over a year, but, probably like 5 to 10 years. Okay. Now, none of this is financial advice. I'm just giving you guys the data from the chart. Okay. We're going to zoom in a little bit more, get past the weekly chart now, or we'll just zoom in real quick and we'll turn a different study on. Okay. We'll turn our volume profile off. Right. And we'll load our simple moving averages and our RSI. All right. Now, what I want to highlight on our weekly chart here is that we have some very nice box consolidation going on. All right. Box consolidation is going to be this right here. All right. There's 3 stages to a reversal. There's your downtrend, there's your box consolidation, and then there's your reversal, your uptrend. Okay. So right now we are in this box consolidation phase where we can expect to consolidate up and down between this channel before ultimately breaking either support and heading further down, which we may do. Okay. Or breaking resistance and possibly getting that reversal for the upside. All right. Now, we do have some bullish divergence going on as well on the chart. Okay. On our weekly chart, if we look at our RSI, okay, which stands for the relative strength index, I need to zoom in just a little bit more here so you guys can see it. All right. But go ahead and look down here at our RSI. All right. We have a low here. Okay. And then we have a higher low over here. All right. So what we've done is actually go higher on the RSI, but what we did on the price action of the stock was go lower. Okay. You see, we have a low here. Okay. And a lower low here. All right. Then we have a low, we have a higher low over here. That's bullish divergence. Now, this isn't a very strong bullish divergence. Okay. This was right around 30, and then this right here was about 31, 32. So it's not a very aggressive. Okay. It's not like the RSI was at 30 and then our next higher low was up here at 50. That would be a much stronger bullish divergence, but it is something to note and be worthy of. Okay. That, we have started our downtrend. We are in our box consolidation phase, and we're starting a little bit of bullish divergence, which hints that we may see some bullish activity in the future. Okay. If we actually go down to our daily chart, all right, we're going to be able to see all of the levels that I've been watching on Wish. Okay. Let's go and pull up a different drawing set real quick. And we'll go to right here, and we can see all of the price levels on Wish that I've been watching. Okay. I've had these here for, pretty much over a year, and they've been very, very well respected. Okay. Look at how each time we drop, we consolidate, and then we head lower. Okay. So that's just giving me good areas where, there could be a potential bottom, right? You see, we're trading in this zone here, bouncing in between these levels until we break lower, find support again. Okay. We find support again here, come up, hit that resistance, consolidate, head lower. We're clearly in a downtrend. Okay. We're trading below all of the moving averages. However, look at how close they are. Okay. They're starting to get really, really close together. They're starting to squeeze. It could, okay, suggest that we may start to see them curl to the upside. And you would look for your 50 simple moving average to cross above your purple 200 moving average. That would be a golden cross, suggesting that there could be some bullish run in the future. All right. So the main levels that I'm really watching, though, all right, is we have $1.57 above and 76 cents below. All right. If we break below $1.12, most likely we are heading down to 76 cents. Okay. That's where I've got the price action taking us. But we do have a very nice daily gap up to $9.83. So why is this important? Okay. Is because if we look at where the price is today, all right, and if we were to hold until this gap fills, all right, that's over 600% profits. All right. Now, this gap, I don't expect to fill anytime soon. I don't expect this gap to fill tomorrow or next month, or perhaps even within the next year, right? It may not finish, it may not fill within 2022. It may take till 2023 or 2024. But if you have a long-term horizon, you have to think about this. If these gaps fill 90 to 95% of the time, the first question you have to ask is when, right? Not so much if because they fill over 90% of the time. So the main question is when? Well, that's going to fill in a bullish market cycle. Okay. Right now, we're in a bear market. It's been a very bad bear market, especially for companies like Wish, for small cap stocks, for, tech stocks and things like that. It's been a rough environment. Okay. So we can expect a bullish gap up to fill during a bear market cycle. We're going to need to get out of the bear market and we're needing to get into the actual next bull market cycle. Okay. Once we're in the next bull market cycle is when we have a chance of filling the gap up on Wish. All right. I'm going to zoom into the 4-hour chart now and we'll go and pull up my 4-hour drawings. And I just want to show you guys how if we look on the 4-hour chart, we can see the bullish divergence that I was speaking of. Okay. This is a great example of bullish divergence right here. We'll go ahead and look at our RSI, relative strength index. Okay. And we can see that clearly we're making lower lows here as indicated by this trend line and higher lows here as indicated by this trend line. Okay. Look at where we first bounced. When we first got our bullish divergence bounce, okay, we went on a 17% rally. All right. Then we came down, created another lower low, but created a higher low on our RSI, bounced off of that trend line. And look at what we had there, a 40% rally in about 8 days. Okay. So this is what I mean by bullish divergence. It doesn't mean that the stock is going to reverse and go to the upside and start a new trend, but it does hint that you could have some bullish activity, right? So we make the lower low, we get the nice 17% bullish rally, okay? But we head down and create a lower low. Then we get a nice 34% rally, 39% rally. Look at what we've done. We've come down and created another lower low, all right? So if we zoom in even more to the 1-hour chart, okay, there is a little bit of 1-hour bullish divergence. So we could get a small pop on Wish this next upcoming week at the time of this recording. Okay, no guarantees. Most likely we will end up creating a lower low as that has been the trend overall. But we do know that off the bullish divergence, we have been able to get some very nice pops. Okay, so if we look, we're in a downtrend here heading lower on our 1-hour chart. We have a nice low, higher low here. All right, we got a nice bounce on it. If we break above $1.35, okay, you can look for $1.37 to be your next take profit zone, $1.40 or $1.44. Those are all the bullish price targets that I would use on Wish if you are looking to go bullish on it and for a possible day trade or swing trade off of some of this bullish divergence. And if you're looking to invest long-term in it, I want to go over this, okay? Let's actually pull this up real quick. All right, so what I've done now, okay, is I've gone to the option chain, all right, and we are looking at the January 20th, 2023 expiration contracts for Wish, okay, meaning that we're looking at all of the strike prices right here, okay, and we're seeing the values of them right here, and this is our expiration date, okay. So what we can do is we can come in here and we can sell the one strike, okay. We can sell these puts. Now, when you sell a put contract, it's basically a contract to buy 100 shares at the given strike price if it's below that strike price at the expiration date, okay. So, currently Wish is $1.27. Okay, and we're in August. It's the end of August right now. If by January 20th of 2023, Wish is trading below $1, okay, you will be forced to buy 100 shares for every option contract that you sold on Wish, okay? So what you can do is you can actually use this to your advantage because this lets you set the price that you want to pay, okay? So, you can use this strategy for multiple stocks, all right? But let's say for Wish, all right, we have $10,000, all right? And we're looking to invest $10,000 in Wish. And we want to be a long-term investor, but we want to be smart. We want to get in at the price that we want, right? So let's say we want to own it at $1 a share, okay? What we can do is we can come in here and sell 100 contracts, okay, and at a $20 credit. All right, and you would hit confirm and send, and that would go through. All right, I have a nice notepad up here explaining it all. So this is for selling the cash secured puts. You get a $20 credit for every single one of those contracts you sell. All right, so if you sell 100 of them, that's a $2,000 credit. All right, but this is a cash secured put. So you need the cash to buy, those shares. All right, so you need, 1,000 shares or enough money, I'm sorry, to purchase 100 shares for every one contract. All right. So that would be $10,000. All right. Sorry about that. I don't know why I have 8,000 right there. All right. So that's a $10,000 cash collateral contract. Okay. So, if you're looking to invest 10,000, this is one way you could do it. So you would use that 10,000. All right. And you would instantly get $2,000. Okay. You would get a $2,000 credit. That's a 20% return automatically. So whether or not you end up being forced to buy the 100 shares of Wish per option contract, or you're not, this is what you're going to be looking at. Okay. You're going to be looking at a 20% return instantly. All right. Now, the biggest fear is if Wish goes under $1, right? If Wish is under $1, let's say it's at 50 cents a share, but January 2023 comes around, and you have all those option contracts to buy 100 shares at $1 a share, then you're going to be forced to own those shares, and Wish is still trading at 50 cents. So you're going to be down, you would be down like 50% on those, on that money. All right. So that's like a major risk that you have to be careful about. You have to be comfortable about, right? So what we did was we looked at the intrinsic value first. We looked at the chart. We saw it's in a downtrend, creating lower lows. So, most likely this stock could go lower, or, it could go higher in the future, right? Over the next 12 months, based on the intrinsic value. We saw some Wall Street price analysts, okay, degrading it, or not degrading it, but, grading it. All right. So this is one way, if you had 10,000 cash, that you could come in here and do that. All right. So you would instantly get, now you would have $12,000. Okay. And if Wish never goes below $1 and stays above $1 by January 2023, well, then you still get to keep that $2,000 that you collected, and that $10,000 cash collateral that you had to give up will be returned to you. So now you have $12,000 of cash. Okay. And, all you did was wait about 3-4 months to see whether or not it would hit. If it did hit, then you get filled. And so now you'll own a whole bunch of shares, and then you'll have $2,000 cash. You can use that $2,000 cash to buy more shares, or you can use it to sell some more cash secured puts. Okay. So hopefully that made sense. And hopefully you're understanding the concept of cash secured puts. It's a really great strategy. And also, I want to highlight, let's say you're getting the shares, you're getting a $20 credit for each share, right? So in actuality, your cost per share is going to be $1.80 per share versus $2, okay? Because you got that $20 credit. So it actually brings your lower cost per share. So, if we got in here at the $1 strike and we got a $20 credit, okay, it really brings our average cost for all of these shares down to 80 cents a share. All right. So, really valuable stuff here. Hope you enjoyed the video. Hopefully it made sense. You were able to track it all. And if you made it this far, I really think you're going to like one of these next videos. So, click on one of those and don't forget to subscribe.